20K or 30K next for Bitcoin? That is the question. Today, we're going to discuss which is more likely, and we'll cover all the FUD that's circulating right now and see what the potential outcome for all of this is. On my display right now, I have the Bitcoin US dollar chart open. And as you can see, the price action is still currently following this jankety blue line that I've had drawn here for quite a while. As you guys know, I do have it on x.com drawn out here, and it is following it quite nicely. Now, this line was drawn sporadically a while ago based on this divergence that we had here, and we have had a move to the downside. As you guys know, I was expecting a 22% drop. Currently, we've had a 21.02% drop, and we did come back down and catch the liquidity from that bounce. So we did bounce up here and we came back down and grabbed the liquidity there with a higher low. But we are consolidating, and we do have a very low RSI here, which we'll discuss in a second as well. And I'll show you what I predict next, or what I expect to happen next for Bitcoin. Now, before we get into that, and I'll show you the analysis there, first I should just point out that September coming up, it is still currently August, is historically one of the most bearish months for Bitcoin. So pretty much every year since 2013, we've closed negatively in September, except for 2015 and 2016. So overall, we are headed into a bearish month, but that doesn't mean that we can't pump into the month and then close negatively towards the end of the month. And the reason that I say that is that we could come back down to this region around here, 24.7K, which again is what I highlighted here in this tweet, 24.7K, but I'll show you exactly why that is a possibility. So you can see I have this green line out here, drawn out here, which is a line of historical significance. So you can see we got rejected from it here, and in the past, we did break above it here. So we've had multiple touches of this line, and it did serve as significant resistance back here in the past, and then here as support recently. So that means that it is a strong level from both above and below. So the fact that we are consolidating near it is a good sign. But I would say that markets tend to punish both those who are overly bullish and those who are overly bearish. So why? Because the market tries to get as much money out of your pockets as it possibly can. The players that are better at the game than you are will try and take your cash from you. So with that being said, we can look at this that I have here, which is the VPVR, volume profile, or volume range of the volume profile. So essentially, it's where the most trading happens in a certain range. So you can see when we have these sort of higher peaking nodes, that's generally where most of the volume or most of the trading is taking place. So if we were to zoom out and it's part of the visible range, essentially what is being shown on the screen, that's where the volume will show. As you can see, we can see that we had more trading in this range around the 23.6K and around the 19 to 20K region. There was a lot of trading or a lot of volume going on there. Now, why is this of significance? Well, generally, markets, or at least the chart, tends to return to levels of high volume trading because it's comfortable in that range. So you can see that we do have a large region here around the 23K region that we could potentially come back down to here, 23.3K. And there's a reason for this. So again, it's not comfortable on the support and resistance. So once we do break through that to the top side or to the downside, generally there's a swift move through resistance that way before coming back to test it as support or test it as resistance, depending on which way we enter that line from. So currently we are above this line here, and I would believe that if the market is going to punish both sides of the trade, it will come back down here and push out the longers who are expecting us to go back up before going back up to this range here, which is around the $28,000 region, another level of significant volume. Now, what happens here is then still undecided. If we turn above this, it's likely we continue to the top of the range. But if we get rejected from this 28K region, it's likely that we come back down and potentially enter the 23K region. And if we lose that, very likely back down to 20K. Now, there are some reasons that this might happen. Of course, firstly, there's a lot of fundamental reasons with the ETF either getting rejected or approved, at least Grayscale's conversion to an ETF. So it's not necessarily that we will have a direct conversion of their fund to an ETF, the GBTC conversion, but we do have potential news on that later this week, as there will be a decision sometime this week. But now, in terms of RSI, as you guys know, RSI is the relative strength index, or the relative move that is currently happening in relation to the previous move that we've had. So currently we're in very oversold territory, not as oversold as in the past in the COVID crash, which was March 2020. and as well as the bottom in November 2018 when we had the drop from, I think, like 6K to 3K. We had a drop below that level. So currently we're a few points above that, which is why, again, I believe we could have a little squeeze to the downside before pushing back up, and then squeezing those who think we're going lower before bouncing, getting rejected, and coming back down. Now, again, this is all speculation. Of course, prediction is just that. It's just a prediction. It's figures in the clouds, whatever you might call it, but it is fun to speculate on what could happen in the future based on this. But if you're looking to trade in the short term, then it's way better to look on the hourly time frame or even on 30-minute time frame to see what's happening there. And as you can see on the lower time frame, at least on the hourly, as I said, we did bounce, come back, consolidate, come back and catch that liquidity, come back up and consolidate again. So it depends now on whether there are more traders going to push us back down here and squeeze out those who are ready to bounce back up to 28K and are getting overly bullish. But if that doesn't happen, then, and we lose this 24, 25K level, it's likely that we just continue straight down. But the market doesn't move in straight moves. As you guys know, it's very zigzag all over the place, up and down. So we will likely come back down before going back up. There's not going to be ever a straight move. Now, let's get into maybe some bullish news just to make you guys feel a little bit better. And there is, of course, Bitcoin hodl waves or activity of supply. So as you guys know, the fundamentals for Bitcoin are in one of the strongest places that we've had in history. Highest number of addresses, highest number of old supply not moving. So what that means is that the old supply or coins older than 6 months that haven't moved is at around 75% of the supply right now. And the reason this is of significance is that generally in times of market volatility, coins move from those who are trigger happy and willing to let go of them at a moment's notice or when the market looks a little bit too scary, and those coins get transferred into the hands of long-term holders or those who believe in the fundamentals of crypto, fundamentals of Bitcoin, and are here for the long run, and they generally don't spend their coins as easily. So when we do have an increase in supply in the hands of hodlers or those who are willing to stick around, it also means that coins are less likely to get sold when we have any kind of shakeout. So the more coins we have in the hands of holders or hodlers, as you might say, who have been here for a long time and have a long-term view on Bitcoin, the better, because it means that portion of the supply is locked up or at least lost. Some coins are lost, or at least in the hands of those who are willing to hold on to their bags, which means the percentage of the active supply or the supply that's constantly being traded is smaller, meaning less liquidity, meaning maybe more volatility to the upside, hopefully, as there are less sellers than there are buyers. Now, let's get into some more bullish news, which is, of course, this mysterious wallet that became the third largest holder of Bitcoin in just over 3 months, accruing 118,000 Bitcoin or $3.08 billion. Now, there's a lot of speculation as to what this wallet might be. And because of the transparency or the transparent nature of blockchain, everyone watches these wallets and these transactions with anticipation to try and figure out what they are or try and figure out who's moving coins around. And that's why a lot of market manipulation can happen for that exact reason. As I've said, a lot of whales will generally move coins around to try and shake people out. They'll send their coins to the exchange because people anticipate coins being sold for fiat when they move to an exchange, and then that actually shakes people out and it scares them, and they sell their coins to those whales who actually manipulated them. So there's a lot of stuff that can go on behind the scenes, or at least in front of the scenes in this case, when we have a visible view of what's going on or the transactions that are happening on chain at any given time. Now, some of the speculation is that this wallet is perhaps BlackRock storing some coins or accumulating some coins in anticipation for an ETF approval. Now, there's a lot of speculation here. Of course, they will need a lot of Bitcoin if they're going to have an ETF because they're going to be selling spot Bitcoin to their clients with a fee and a premium, of course. But we don't have any certainty of who this wallet belongs to. There is also some speculation that perhaps Gemini owns this wallet. Maybe they're buying coins on behalf of BlackRock, or they're maybe holding custody in the meantime until the ETF gets approved for BlackRock. But that's only because the BlackRock ETF and the whole ETF narrative is circulating in the news right now. But there's not very much likelihood that this is the actual BlackRock's wallet. It is just all speculation at this point. the more likely answer is that it's just an exchange wallet, as the other two largest holders of Bitcoin, or the two largest individual wallets, are Binance's cold storage wallet, as well as I think Bitfinex's cold storage wallet. In this case, it could be Gemini's cold storage wallet, and they're just moving the funds around and moving them to a safer place, or maybe just shuffling some internal funds around for a variety of different reasons. So the speculation really does permeate throughout the crypto Twitter and crypto webs as to what could potentially be happening with these wallets and with these transactions. But at the end of the day, we try and keep a level head here to understand what could potentially be happening, rather than just speculating and trying to enter crazy trades based on things like this. As you guys know, there's a lot of stuff that goes on in the crypto space that can be perpetuated by news. Another wallet watcher is, of course, to do with Vitalik Buterin stirring up market uncertainty with his $1 million Ethereum transfer to Coinbase. Now, this might sound scary with a headline like this. They've got red behind Vitalik over here. According to on-chain data, a wallet associated with ETH founder Vitalik moved $1 million in Coinbase earlier today. Now, why else would he move it to Coinbase other than to sell it for fiat? Maybe he has some operating expenses. Maybe he needs to buy his mom a great dinner. Who knows what this is for? But why this is of significance as well is that in the past, when Vitalik or the Ethereum Foundation has moved Ethereum to an exchange, it has generally marked a relative top for the market. And this could be caused by the sheer volume of Ethereum that the foundation or Vitalik is selling and putting a lot of sell pressure on the market. Or again, it could be very similar to, as I said before, people watching this wallet and then anticipating that, ooh, something bad is happening, speculating that maybe he knows something that we don't. Maybe there's some insider information, and then people act on that movement. Now, in this case, it might be scary saying that $1 million of ETH is being transferred to the Coinbase, but in the past, if we compare it, it's fractionally small compared to the movements that we have in the past. In 2021, the co-founder moved 20,000 ETH to an exchange, and that marked the top. And in 2021 as well, he moved to 35,000 ETH, which marked a local top around $3,500 for ETH. Now, in this case, in comparison, it's nothing. It's around 600 ETH, which is a very small amount of Ethereum. This sell, if it is a direct market sell, will be absorbed very, very quickly and very easily. I don't anticipate this to have any real sell pressure on the market itself. It's more so the market reacting to this news because he has a public wallet. So these are things you should be aware of. Keep these in mind when you see news headlines and things like this, because the masses who don't understand this or don't think in these principles react to this news on an emotional level. And that's how the coins get transferred from those who are trigger happy to those who are going to hodl their coins far, far into the future and will grow their net worth to levels that you will never understand because you sold your coins to a headline that you read on Google. Now, another piece of speculative information, which we'll take a look in a second, is to do with exchanges and Binance. Now, if you guys know, I am not necessarily opposed to centralized exchanges. They are one of the big facilitators of transactions and of trading in the market. They're probably the biggest facilitators of transactions in the market. It's the way that we on-ramp and off-ramp fiat into the crypto market. But at the same time, you need to be aware of the risks and potential outcomes that come with having these large centralized entities controlling a large portion of the trading that happens in the cryptocurrency industry. Now, as you guys know, Celsius collapsed, Luna collapsed, and we had the FTX collapse. We had large declines in Bitcoin around those times. And of course, that is for good reason. It just meant that people were panicking. There were bank runs. It means that coins were getting stuck on exchanges due to bankruptcy and all of these crazy things that were going on with Sam Bankman-Fried commingling user funds and using those funds to prop up tokens like the FTT token and trading with them and trading on insider knowledge. A lot of shady stuff goes on in the crypto industry. And why this is of importance is to do specifically with the BNB token. So there has been some unusual price action on Binance, loads of selling pressure on Bitcoin not present on other exchanges, more cannon fodder that they may be selling spot Bitcoin to prop up BNB. The 220 level is being staunchly defended, may be a liquidation level for BNB collateralized loan. Now, this is speculation. There's no proof of this. There's no proof that Binance is under-collateralized for a loan that they've taken out on BNB. But the BNB token is an essential token for the ecosystem that is Binance. As far as I know, their employees are paid in BNB. There's a lot of stuff that goes on in terms of funding with BNB and investing in projects. Like, there's a lot of stuff that goes on behind the scenes there. And it kind of has some similarities to the FTX collapse, where this token is a very important aspect of this trading ecosystem. And if the value or the collateral value of that token declines, there's potential for defaults on loans. If there are any loans, there's potential for the token collapsing and people being scared and pulling their money off of the exchange and seeing the token collapse because it's associated with the exchange and causing a bank run on Binance, which is exactly what happened with FTX. It's exactly what happened with Luna, caused a bank run on the collateral because the users could see on-chain that there wasn't enough collateral. Fractionalized reserve banking is the name of the game here. That's how our traditional financial system works and why we have bank runs in the traditional world. And the same thing can happen in the world of crypto. So I want you to be aware of this. Currently, BNB is trading below this suspected liquidation price. Again, it is just speculation. Please be aware of that. And the reason this is of significance is, of course, because we had this huge run up from January 2021. Where BNB coin was trading around $30 all the way up to $700 near $700 at its peak. And majority of its volume is around that range, around the $30 range. But on a shorter time frame, you can see we have some volume around the $130 region, as far as I'm aware. There we go, $130 region. So if we do lose this, we have lost the 200-week right here. If we break down, it will be the $130 level. But if there's a large loan here anywhere that is being collateralized and needs to be liquidated, then that would push the token down drastically. People would rush to pull their money off the exchange, and that could cause a bank run. But if you are watching this and you are aware of these risks, please know that you should never keep all of your funds on any exchange. Keep those funds safe in a cold storage wallet, or only transfer funds to an exchange that you're actively trading with. These are things that should be common knowledge by now, but of course is not. Hopefully, if you're following this channel, you haven't done anything wrong like this and made these silly mistakes, because it is a silly mistake and you can lose money unnecessarily for doing these things. But with that being said, I think overall we do have a lot of bullish news for Bitcoin coming up that could align to do with the Bitcoin halving coming up in 2024, as well as potential spot ETF approvals in 2024. But until that happens, there's going to be a lot of manipulation. There's going to be a lot of downside pressure. There's going to be a lot of regulatory pressure. But all this does is it gives us more and better opportunities to accumulate Bitcoin. As you guys know, I don't believe in accumulating during a bull run or during an uptrend. I think it's one of the dumbest strategies you can have, because you're essentially just buying into the FOMO and you will get burnt. So if we do break back down to the $20,000 regions, I think it's going to be one of the best risk to reward ratio positions to purchase Bitcoin or add to your long-term bag that we will have for many, many years to come, because the fundamentals are falling into place. The blocks are falling into place for a very hot, very bullish bull run. But until that time comes, please do follow along in the channel. I will outline in the coming future some coins that I'm looking at that are important, I think, for narrative investing, as well as to do with their value relative to Bitcoin. As you guys know, I have some very interesting thoughts there as to the value of altcoins versus Bitcoin. And it's important that you pay attention to the market as a whole, rather than just looking at Bitcoin and its fundamentals, or just looking at Ethereum and its fundamentals, or just looking at some random token and its fundamentals. You need to look at the value of these tokens in relation to the other tokens and into the market as a whole, and into the overall macro environment to do with stocks, as well as just regulatory environment. So if you found any of this information that's useful, I really do appreciate it if you give the video a thumbs up. Let's try and get it over 1,000 likes. And if you are new here, don't forget to hit the subscribe button. And as always, I shall see you in the next video. If you made it all the way to the end, comment down below. I'm using a remote clicker on you. Bye-bye.